Hi, you're watching Your Trades with me, Shreyanshi Singh and Snehisha on ET Now, and over the next half an hour, we'll help you make sense of the trading day gone by, tell you which stocks were buzzing, which sectors were buzzing well, and speaking of a buzz, what a day it was for the benchmarks, right?
Well, absolutely.
Because you did see the Nifty and the Nifty Bank manage to hit those record high levels. When you look at the Nifty Bank, of course, you crossed the 49,000 mark for the first time. When you look at top contributors as well to the move, of course, ITC today and Reliance Industries contributing most in Nifty's up move as well. And speaking of others that were above, you did have the likes of Coal India, BPCL, UPL, Kotak Mahindra Bank as well. All of these stocks eking out gains anywhere between 2.5% to 3% as well. And not just Kotak Mahindra Bank, when it comes to banking heavyweights, there was of course SBI that was doing a lot of the heavy lifting. When you the charts for SBI as well, what you're seeing is an uptick coming in of about 2%. There on your screens, close around those levels with an uptick of about 2%. Now, Nifty PSU Bank was, of course, the top sectoral gainers. And when we shut shop, there was, of course, the Nifty PSU Bank being led higher by PNB as well as Punjab and Sindh Bank. That was the sectoral picture. The only laggards that we saw today were auto and pharma, not mirroring the kind of run that we've seen come in for the major benchmarks, especially the Nifty and Nifty Bank, right, Snehi? And then, of course, when you look at key newsmakers, then there's, of course, Reliance Infra. That was in focus in today's trading session, and in a release to DMRC, the Supreme Court set aside the 8,000 crore Arbitral Award, which was in favor of Anil Ambani-owned Reliance Infrastructure's Metro Arm Delhi Airport Express Private Limited. BSE upheld the High Court's bench division decision, which said that the arbitral award against the DMRC suffered patent illegality. Now, of course, in February, the SE did reverse its verdict, coming in on the DMRC's curative against the dismissal of its review petition against the arbitral award of the 8,000 crore coming in favor of DA and EPL. So that was one counter that was buzzing. There was, of course, Patanjali, and we couldn't really look away from Patanjali, right?
Absolutely, but before that, let's go back on this metro rail news when it comes to Reliance Infra. And I believe the chart was not updated. It's locked in 20% lower circuit. The order is not in favor of Anil Ambani's owned Reliance Infra's arm, Metro Delhi Airport Metro Express. This comes on the back of some patent illegality that the Supreme Court has ruled against, which now this company is going to have to refund the entire 8,000 crore rupees back to Delhi Metro Rail Corporation. That is why the stock was down and out, locked 20% in lower circuit. But yes, moving on, like Shreyanshi mentioned, we cannot look away from Patanjali today on the back of that Supreme Court order coming in, where they've said that they do not accept Patanjali's second apology coming in as well. Now, the next date for this hearing is 16th of April, and they have also warned the company to watch out for more action coming its way on the back of the misleading advertisements that the company issued. Moving on, then let's also talk about Boeing, because that company is also in focus. Obviously not listed in India, but globally Boeing is in focus because the airplane deliveries have fallen to only 83 in Q1 of the calendar year 2024, and this is down from 157 in the previous quarter coming in for Boeing on the back of that 737 indiscrepancies that they've been seeing. So Boeing is also going to be under pressure, so we'll see how that stock performs when Wall Street opens today. And lastly, let's also talk about this ET Now exclusive that we've just received. India's blueprint to become Asia's gas trading hub. Now, we're getting word from our sources that India is on track to become the gas trading hub in the next few years. The oil ministry is preparing a mega plan to become a gas trading hub for the Southeast Asian market, and pipeline infra, LNG terminals, regasification facilities, as well as gas storage facilities and retail network is making India the hotspot to become the gas trading hub in the next few years. So, well, this is largely what was everything big that happened in the market today. And let's get on board our technical expert Kunal Bothra to make more sense of today's market moves. And Kunal, thanks for joining us today. Help us understand the moves that we've seen on the market today. Yet another fresh record high coming in for Nifty as well as Nifty Bank. Where are we headed from here, or do you see this rally continuing till the elections come, which are not very far away, and what's your general view when it comes to the market moves going ahead?
Well, I think it's a fantastic kind of a rally which we've seen the last 13, 14 trading sessions, because I think we've seen 13 consecutive days for small cap index to show positive gains. Bank Nifty come back towards a breakout of the new high. We've managed to cross the 49K mark for the Bank Nifty. The Nifty is now inching very close towards that 23,000 mark. These are very strong kind of landmarks which we are witnessing for the indices. And you know what I also like about the market the last few days and over the last couple of weeks is the churn which the markets are going to. So right from the risk on sectors, the high beta sectors like the metals, commodities, real estate stocks, towards the more maybe slight moderate beta sectors like the private sector banking stocks, we've seen a good churn happening in this space, and I think that's a classical sign that this trend is likely to continue for the index going forward. So would maintain the bullish stance, and my expectation is that possibly in the next 1 week to maybe 8 odd trading sessions, we could see possibly another 800 to 1,000 point rally for the Nifty.
So it's about this Nifty then, and that is what you're seeing about the Nifty. But then what about, where are you seeing value emerging then? Where are your top picks at this point?
So I'll go with 2 buy calls, and the first which I'm actually suggesting, in fact, both of the stocks are the ones which are coming back into their own shape in terms of recovery. So 2 buy calls. The first one is about Federal Bank. That's a stock which is now coming very close towards closing the gap which was created almost half odd month back when the stock had fallen down from 160, 165 territory. So this could probably be a very strong breakout for Federal Bank, and if the stock manages to close this gap, we could see a very strong turnaround on the positive side for the stock. So 170 is a target. Stop loss could be kept at 155 approximately. The second would be a Ban Sun TV. That's also a stock which has managed to recuperate, come back about the 200 as well as the 50-day moving average. Classical signs of double bottom formation on the daily chart. So would suggest a buy with a target of 655, stop loss at 618.
Well, all right, Federal Bank and Sun TV have made it to Kunal's technical radar. Kunal, thanks so much for joining us. On that note, we'll let you go. But viewers, let's keep it going with the technicals then. And now I'm being joined in the studio by my colleague Shrishti, who is here to take us through the 2 technical charts that she's flagging out for us today. Shrishti, what has made it to your radar?
So 2 counters on the technical front. Firstly, let's have a look at one of the breakout candidates today, that is Coal India, and what a move in today's trading session. Almost a 4% uptick, what we have seen in this counter, and falling trend line breakout is what we witnessed. The stock managed to bounce back exactly from 20-day moving average, and other than that, the move today was also supported by a long build up on the derivative side. So this is the first counter that we wish to highlight on the breakout side, as all of the PSU counters were showing momentum and trying to rebound, and Coal India was one such stock that we spotted on the technical front. Moving on to the breakdown stock, because in this market where Nifty, Bank Nifty were touching all-time high levels, Cipla actually was trending weak in today's trading session. Interestingly, what we did spot is a double top formation on Cipla's chart. You can see that the stock managed to face a rejection exactly near to that 1500 odd level. It managed to break its 20-day moving average, and just a day prior faced a rejection exactly its 20-day moving average. And as I checked, the stock did witness some short build-ups on the derivative side. So this is the second counter that we want to highlight on the breakdown side. So these are the 2 stocks. Back to you.
All right, thanks Srishti for flagging out those breakdown and breakout counters. Moving on then and keeping it with trends, but premiumization is an important trend that is shaping up when it comes to consumption. We caught up with Mihir Vora, CIO, Trust Mutual Fund, listening to what he had to say about the roadmap for premiumization across sectors.
All premium services and goods will grow at rates much faster than what we think they will.
What is premium consumption? What is the ticket value according to you?
It's the segment, I would say, not ticket value. Say travel and leisure,
Okay.
hotels, high-end cars, higher-end bikes. You can say a lot of high-end electronics. Okay. All that consumption basket, high
Luxury
premium real estate, exactly, premium real estate. All those segments will grow at a rate much faster, and the logic is simple. First of all, the pyramid is shrinking at the bottom and growing at the demographic pyramid, income pyramid is growing at the top much faster.
Urbanization has started.
Urbanization, higher income levels. But the numbers, if you just put in perspective, can be very stark. And when we talk about 10, 20 year runway, you need to keep those big numbers in mind. Between 2005 and 2018, or 2006 and 2018, the number of households with an income of more than 30 lakhs grew by 8 times.
Okay.
Okay, it was about 10 lakh households, it became 80 lakh households.
8x.
Right? That number, 80 lakhs, is going to go to 3 crores by 2030. Upper middle class will grow by 3 times.
Okay.
Very similar. So 4x increase in the highest level income level segment, 3 times increase in the upper middle class, and the bottom shrinking. So this will lead to a long runway of premium consumption.
Well, all right, that's the word coming in from Mihir. But viewers, with that, we'll slip into a very short break. But as we do that, we'll leave you with the chart of the day, which is on the fresh amphi data that we've received today. Take a Hi there, welcome back. You're still watching Your Trades on ET. Now, let's take a look at the FNO setup of today, or how the derivatives were shaping up today. What's key to note is, since tomorrow is a holiday on account of Eid, the expiry for Nifty as well as Nifty Bank both today. So let's take a look at how the session panned out then. For the index futures trend for the 25th April expiry, we're seeing some long build-up coming in on Nifty as well as Nifty Bank as well. What's key to note, India VIX is now at 11.1 thereabouts. 2% fall today as well. Remember, there was a 2% fall on the India VIX yesterday, so that's a positive coming in. And looking at the active calls and active puts for the 18th April expiry, let's first take a look at the active calls. Then we're seeing some call buying happening at 22,800 and some slight call buying happening at 22,900 as well. So those are the levels that you need to be watching out for when it comes to the active calls. But when you look at active puts for the 18th April expiry, then we're seeing some writing happening at both 22,700 as well as 22,600, making 22,600 the key support level to watch out for. And over the course of the week as well, all of the technical experts that have joined us on the channel have also quoted 22,600 as a strong support level for the Nifty. So well, we'll be watching out for all of these levels when it comes to the benchmark index on Friday, as well as moving on for the next week.
Absolutely. Well, we'll definitely be watching out for the benchmark and for that support level. But what we'll also be looking at is, of course, that metal pack, because metal stocks extended their shine on the back of multiple triggers. Likely bottoming of iron ore prices was something that spurred NMDC as well. CLSA upgrades on Vedanta also coming in. That did perk up the stock a lot in trade as well. Just standing by with this snapshot of the metal space.
Let's talk about NMDC. The stock is up nearly 4 to 6% in today's trading sessions. One of the reasons, of course, is that analysts believe that iron ore prices have now perhaps bottomed out. Remember, iron ore prices were trading at that $140 per ton in January this year. They fell below $100 per ton in April, and now analysts believe that iron ore prices have bottomed out. Good manufacturing and macro data from across the globe, not only China but other developed and emerging markets, is also aiding the rally in commodity prices globally, and that's why Indian metal stocks have also been soaring in trade of late. But NMDC is a pure iron ore play after the demerger with NMDC Steel, and very many positive factors. The balance sheet is very strong. Analysts expect volume CAGR of about 8% over the period FY24 to 27, and EBITDA CAGR of about 10%. Dividend yield, it generates dividend of about 4%, so very positive parameters across the board. One of the important factors being bottoming out of iron ore prices, and that is why NMDC is gaining in trade today. Apart from that, let's also talk about Vedanta, because CLSA has gone ahead and upgraded the counter to buy versus their earlier reduced rating. They've also hiked their target price to about 390 from their earlier target price of 260, where they believe growth and margin expansion capex will lead to earnings growth going forward. Their corporate structure and leverage will be the key monitorable, but they've gone ahead and hiked their EBITDA estimates by 4 to 13% over the period FY24 to 26 on the back of very positive updates that has come in from CLSA on Vedanta, we are seeing that bump up on the counter as well.
All right, Ashesha, thanks so much for taking us through that. Well, very positive moves that we've been seeing on the metal index. Yesterday's top gainer, today's second highest gainer only after Nifty PSC, which was up 1.4%, metals up 1.1%. Even when you look at it on an individual basis, Vedanta and MDC, like Ashesha mentioned, all of them doing stellar early into this trading session. But let's get a move on. Let's get some more insights when it comes to metal pack then. And Sanjeev Bhasin, the director at IIFL Securities, is positive on Vedanta and Nalco among the metal pack. He also believes that Vedanta is still very undervalued. Let's go across and listen into his views on how to play the metal pack now.
Vedanta has been one of our clear picks. It's been a 33% up performer. Nalco, which we recommended very strongly at 1820, 180.20 is up to new highs. So is SAIL. Select pockets you could take off Tisco, Tata Steel and Hindalco. You could take some money off. Hindalco, remember that the upfront capex we have announced for their Novelis play could be a little bit on earnings. So Hindalco and Tata Steel are two which we recommend to take some money off. We would put that money back into Vedanta. We think Vedanta, simply put, is the best play you have on the total non-ferrous play. So even people don't realize it's the only nickel producer in the country. Along with that, Hindustan Zinc is the best proxy for silver and silver prices, and have a whole basket of other, they've got 2400 megawatts of power, they've got coal, they've got everything possible as iron ore. So I think Vedanta still is a very, very undervalued stock.
All right, that was the word coming in from Sanjeev Bhasin on Vedanta. Moving on then, in March, Boeing's airplane deliveries fell 29 while Airbus delivered 63 airplanes. This drop comes as Boeing faces increased scrutiny and criticism due to safety concerns. But which domestic carriers will get impacted? Somit is standing by with the answer and more details. Somit?
Indigo is a stock that remains in focus because the Boeing's aircraft delivery for the month of March, if you see, has come down to around 29. Now, this number was 64 last year, and the US regulator has set a limit of around 38 aircraft. Now, this has also been used by the US regulator post the issues that we had seen in the Boeing aircraft. But still, the number that Boeing has actually delivered in the month of March is much lower at around 29. Now, against this, if you see, its competitor or its rival has managed to deliver 63 aircraft in the month of March. So how does this impact Indigo? Now, do remember, in the Indian market, Indigo is the only aircraft which has the highest exposure to Airbus and zero exposure to Boeing. Now, the total order backlog of the Indian Airline stands at around 1,618, of which Indigo's order backlog is at around 948, and this entire exposure is only to Airbus and no exposure to Boeing, while the exposure to Boeing of Airline stands at around 416 aircraft, which is nearly 25% of the total order backlog. And which are the players which have these orders placed to Boeing? Well, it is all the competitors of Indigo, that is SpiceJet, Akasa Air India. Now, because of the slower or lower number of deliveries coming in from Boeing, the market share gains for these companies could get limited, given the fact that they won't receive the aircraft delivery on time, and hence their expansion plans might get hindered. Apart from that, another reason why Indigo might be gaining is the fact that air ticket prices have also been on an upward surge, given the fact that the holiday season is upcoming. So 2-month forward airline ticket prices, you see, among the top 20 routes, for 13 routes it have increased in the range of around 3 to 31%, and we had reported this in the previous week. So keep an eye out for Indigo in trade.
Alright, Samit, thanks so much for taking us through that. Let's get a move on then and talk about a real loser in today's trading session, and that happens to be Reliance Infra, because that stock was locked down in 20% lower circuit today. Now, relief to Delhi Metro Rail Corporation, the Supreme Court has set aside the 8,000 crore arbitral award, which was earlier in favor of Anil Ambani owned Reliance Infrastructure's metro arm. The stock has been under pressure ever since this SC ruling has come out. My colleague Sumit Chaturvedi is joining with more details and what's ailing the stock. What is this order that has now been reversed? Sumit has all of those details. Sumit, take it away.
It's a big win for Delhi Metro Rail Corporation in a case relating to arbitral award given in favor of Anil Ambani firm. 2,800 crore arbitral award was given to Anil Ambani firm. It was against DMRC. The case relates to 2008 when a concessional agreement was signed by both parties on a BOT basis. Later on, Anil Ambani firm terminated the contract, citing structural defects certain in DMRC-made metro line that was running from the airport to central Delhi. If we talk about the case, the court effectively restored the judgment, in fact, which was rendered by a division bench of Delhi High Court that had ruled in favor of Delhi Metro Rail Corporation. Well, the Supreme Court then had set aside the overall case in September of 2021. But today, the case was in the favor of DMRC, as the arbitral award in favor of Reliance Anil Ambani-owned firm was set aside today.
All right, thanks Sumit. So that is all about the arbitral award that has been set aside. But moving on then, and as promised, get you a roundup of which stocks were buzzing in today's trading session. Just standing by with that list.
Well, yes, first up, let's talk about Colte Patil. The stock was up 7% after Motilal Oswal initiated coverage with a buy rating and a target price of 700 rupees per share. They have in their report stated that accelerated business development activity and strong balance sheet position will drive earnings re-rating for the company from here on. They expect company to report 21% EBITDA CAGR over the period FY23 to 26. On the back of this initiating coverage report, Colte Patil was gaining nearly 7% today. Moving on to MCX then, where Motilal Oswal has upgraded the counter to buy from the neutral rating with a revised target price of 4,300. They believe new products and variations of the old product will drive earnings growth for the company from here on, and regulatory measures will also provide stimulus. MCX was gaining on the back of this. Bharti Airtel, meanwhile, where Antique initiated a buy with a target price of 1,505. They believe telecom tariff hikes are a given, and Bharti Airtel will be the biggest beneficiary of these price hikes. They also say that Africa has long runway for growth, and hence this was gaining nearly 2%. Spark, meanwhile, was locked in lower of 5% since the start of the day on the back of a negative news flow, where they say that Proseek study of a drug which is used for early Parkinson's disease did not meet the pre-specified primary endpoint, and hence shut down the study. So negative news flow, this counter was locked in a lower of 5%. Lastly, let's talk about Godavari Power and Ispat. It was up 7% after one of its plant, which caught fire in August last year, resumed operations. Positive news flow, this counter was up 7% today.
All right, thanks Ashesha for that list and those updates then. But moving on, TCS is all set to kickstart the Q4 earnings season come this Friday. What is the street penciling in from this particular major? Anisha is standing by with that snapshot. Anisha?
Well, while the overall expectations from the IT sector are a bit muted, TCS could perform better purely on a relative basis. The lower furloughs and the ramp up of the BSNL deal would mean that the revenue might jump up by 1.7% if you're looking at the rupee revenue, and the dollar revenue is expected to jump up by 1.3%. There's also some recovery which we're expecting in the BFSI sector. Manufacturing sector should continue to perform well. Margins are also expected to remain steady, maybe between 25 to 25.2%. That's because the operational efficiencies will kick in, plus the subcontracting expense has been on the lower side, so that should support the margin performance. Profitability is expected to jump up by 2% sequentially, because last quarter, if you remember, there was one-off provision. That is not expected this time. In terms of the other internals, the constant currency is expected at 1.2%, though the expectations are varied, right, from a 0.5% to 2.5% kind of range is what we have on the constant currency growth. We'll also watch out for the deal win momentum. It's expected to be steady between that $7 to $9 billion mark, aided by that $2.5 billion deal that they had signed with Aviva. In terms of the commentary, of course, FY25 outlook will be important to watch out for. Whether the demand has bottomed out, any signs of recovery in discretionary demand is something that I want to hear the management comments on. Deal pipeline and other headcount trends is something that gives you the idea about the growth recovery that the company is looking out for, and that again becomes an important monitorable. But overall, a steady set is what we're expecting from TCS.
All right, all eyes will be on TCS's Q4 numbers. A steady set is what you're expecting. Shreyansi, earnings season kicks off from Friday. That anxiety is going to return.
Absolutely,
it's going to be a tough time for us, but you don't worry, because we'll be bringing you everything down to the T when it comes to earnings with ET. Now, but viewers, on that note, it's a goodbye from Shreyansi and me for today's session. We'll see you back on Friday. Enjoy the holiday tomorrow.
If you like this video, then like, share and subscribe to ET Now.